The stock market, often likened to a roller coaster of emotions and fortunes, can exhibit some truly hilarious movements. These shifts, driven by investor sentiment, market speculation, and occasionally bizarre news, result in some of the most amusing and perplexing events in financial history. Let's take a closer look at the comical moments that have shaped the market's unpredictable journey. One of the most infamous examples of absurd stock market behavior is the meme stock phenomenon. In early 2021, stocks like GameStop and AMC, once considered sluggish and on the brink of failure, saw their prices skyrocket in ways that defied all logic. This surge was triggered by a group of Reddit users on the r Wall Street Bets forum who noticed that institutional investors were heavily shorting these stocks. In a kind of collective act of rebellion, they began buying up shares en masse, causing the price to increase exponentially. What followed was an intense battle between retail investors and short sellers, with the stock price of GameStop reaching absurd heights, more than $400 at one point. Investors who had held on to GameStop stock for years, laughing at its slow decline, found themselves in the strange position of watching their portfolios grow by thousands of percent. The GameStop saga wasn't just about rising stock prices. It was the sheer absurdity of the whole situation. The company itself had been slowly declining for years, unable to compete with digital game downloads and online shopping. Yet, at its peak, the company was worth more than some of the largest, most stable corporations in the world. It wasn't about the fundamentals of the company. It was about the power of collective action, social media, and, of course, a touch of humor. The memes and jokes that accompanied the stock's rise and fall were endless. Investors proudly declared themselves apes in solidarity with the movement, and the phrase "to the moon" became synonymous with stocks that were inexplicably shooting up in value. This moment wasn't an isolated incident. The world of stocks is full of oddball movements and strange trends that defy rational explanations. Take, for example, the dot-com bubble of the late 1990s. In the final years of the 20th century, the stock market was flooded with tech companies, many of which had no revenue or even a clear business plan. Investors, caught up in the excitement of the internet revolution, poured money into these companies, pushing their valuations to levels that seemed impossible to sustain. Companies with names like Pets.com, Cosmo.com, and Webvan soared in value, despite having little more than a website and a lofty promise to change the world. This mania eventually burst in 2000, and the bubble deflated as quickly as it had inflated. Yet, the image of a sock puppet advertising a pet delivery service, Pets.com, and its stock price soaring only to plummet remains one of the funniest and most emblematic moments in stock market history. Another example of the stock market's oddball humor can be found in the 2008 financial crisis. While the global economy was reeling, some investors turned to the most bizarre hedge funds for refuge. For instance, there were reports of a hedge fund that bet on the collapse of the global housing market by using complex financial instruments like collateralized debt obligations, CDOs, and mortgage-backed securities, MBS. These instruments, designed to spread out risk, were sold as safe investments but were ultimately at the heart of the crash. The irony, however, lies in the fact that a handful of investors, including the infamous Michael Burry, made famous by the movie The Big Short, were able to predict the collapse and bet against the market. While others laughed at their crazy idea of shorting the housing market, these investors were the ones who ended up reaping the rewards. Their laughter was all the more satisfying because, while the rest of the world lost money, they knew the meltdown was coming, and they had placed their bets accordingly. Moving to more recent times, we can't overlook the ever-popular trend of SPACs, special purpose acquisition companies. SPACs are essentially shell companies that raise capital through an IPO with the goal of acquiring an existing private company and taking it public. While some SPACs have worked out well, many have become the subject of ridicule due to the speculative nature of their investments. Investors often buy into SPACs without knowing what company they're actually investing in, which is akin to purchasing a mystery box. And, of course, the mystery box sometimes doesn't live up to expectations. The rapid rise and fall of SPACs has provided a constant stream of comedic moments, with analysts and investors alike scratching their heads and trying to make sense of the madness. Even in the midst of global crises, the stock market has found ways to entertain. During the COVID-19 pandemic, the market experienced extreme volatility, with stock prices swinging wildly on news about vaccines, government lockdowns, and global economic disruptions. While many investors were understandably concerned about their portfolios, the absurdity of certain stock movements provided a bit of comic relief. For instance, when Tesla's stock price began to soar into the stratosphere, fueled by Elon Musk's eccentric tweets and the company's promise to revolutionize the car industry, it became a spectacle. At the same time, some companies in completely unrelated sectors, like Zoom, whose stock price shot up due to its role in enabling remote work, also experienced massive surges, further proving that market trends often defy the very basics of business logic. The humor in stock market movements often comes from the unpredictability and the fact that emotions often rule over reason. Fear and greed are powerful forces, driving decisions that can result in comical outcomes. One of the funniest things about the stock market is how a single tweet or a meme can cause a stock to surge or plummet, often with no clear connection to the company's performance. The sheer randomness of stock price movements sometimes feels more like a game of chance than an investment strategy. Investors, analysts, and even economists frequently find themselves baffled by market swings, which only adds to the humor. At the end of the day, stock market movements may be unpredictable, but they also offer a comedic spectacle that few other industries can match. From meme stock madness to the comical rise of questionable tech companies and absurd investment strategies, the market is full of quirky, humorous moments. While it's true that these movements can sometimes have serious consequences, they also provide a reminder that in the world of investing, anything is possible, and that includes a lot of laughs along the way.